So, how did I save the fifth largest accounting firm in the USA 50% on telecom? How did we do it without changing vendors? So, I was brought in to help the New York office of RSM McGladrey by the CFO and the IT infrastructure manager. They had 800 people there, and I was pretty excited, but when I started working with them and looked at their billing, I was initially worried I wouldn't be able to save them very much money. They really weren't spending that much money considering they had so many people. And it turned out they had bought very intelligently from their vendors, and with so many people in one place, they had economies of scale and they could use techniques like least cost routing. And the end result was that they had a very low spend per employee. So arguably, I shouldn't be able to help them that much, but we did find 50% savings and they didn't have to change vendors. In fact, they were under contract. So that raises the question, how did we do it? So what they did not have was visibility into their costs. There was no inventory document listing all their vendor services, what they were for, what they cost, etc. So we created one for them. What they did have was lots of bills they had to review each month, and these bills, not surprisingly, didn't tell them how to save money. And the vendors didn't call them either with cost-saving ideas that would decrease the vendor's revenue. So creating an inventory gave us visibility into their spending and the details of their large bills. So to create this inventory, we looked at the bills, but to really create the inventory, we had to ask the vendors to provide us a bunch of missing data. Fortunately, this data is today available in reports and billing portals from almost all vendors. However, we find typically bills are usually missing key data points, so additional data is needed. So that's important to keep in mind what we found. So with visibility of an inventory, we found the following cost savings, and I'll explain how we did it for each one. So we reviewed every single service in the inventory, just literally every single one, row by row, and we had the inventory set up like a database. And we asked how we could save money on each service. So we asked 3 questions. Is this service being billed for correctly? Is it unused and should be used, or maybe it should be removed? Are there better rates available for this service? So we got these results. There's about 7 of them, big ones, and there's probably some other minor ones I forgot about. So 1, they had sufficient capacity to remove an expensive voice T1 line and use a less expensive, unutilized voice T1 line that they were contractually obligated to purchase. So one line was expensive, but they weren't contractually obligated to purchase it. The other line was less expensive, and they were contractually obligated to purchase it. So by swapping them, by getting rid of the expensive one and using the one which was unused that they had to buy, they could save money. We found this by looking at the inventory we created, and we could see which lines were utilized and which ones were not, and which ones were the best deal. So we could easily identify what wasn't under contract too. So this info wasn't obvious in the bill, and we had to track down utilization and contract data and let the client know what to do and remove the expensive bill, or the expensive line, I should say, from the bill. So in the bills, they normally don't give utilization data, at least not in an easy to use way, and often they don't really give anything at all, to be honest, and they don't usually include the contract data, so you have no idea what's under contract and what is not. So item number 2. They were paying for 720 phone numbers, DIDs, that they weren't aware of. And so with an inventory, we could cross-reference the call records and the client records of assigned numbers and figure out which numbers didn't serve a business need. And this info about unused DIDs wasn't in the bill, and the vendor didn't tell the client about the unused service. We then discussed this finding with the client and got the DIDs removed from the bill by working with the vendor. So the next 3rd item is they were paying substantially over market rate for international calls. And we were able to easily see how big these costs were and had access to market data showing us the low rates other companies were paying for international calls and how far rates had fallen. Now, fortunately, vendors are open to fixing these prices if you talk to them and can show them they're charging other people less and they're overpriced. So not surprisingly, the bill didn't highlight these charges and say, just so you know, these charges are overpriced, and the vendor didn't call the client either and let them know. But fortunately, we were able to find this and fix this for the client. It wasn't a big deal. So that was great. Even though they were under contract, they still were able to save. The next item was we verified the physical location of all services, and we discovered they were paying for large numbers of phone lines that were still in an office they moved out of. And we did this by making sure the inventory included the physical location of every single service in their bills. We then looked at where all the services were, and we noticed that a bunch of lines weren't at their headquarters, but at another location in New York City. So this info wasn't in the bill either. It's very common for vendor bills to not clearly tell you where services are located. Sometimes they do, sometimes they don't. So the client in this case had asked for the lines to be removed when they moved, but the vendor had quote unquote forgotten to do it and just kept charging the client. We found that this happens all the time for clients. In fact, I feel like the typical client is charged for something which the vendor has forgotten to disconnect. It just seems to be the way of the world. So we worked with the vendor to get the services removed and to get credits back. So that was successful. So another savings was that they recently signed a 3-year contract obligating them to spend a certain amount each month on outbound calls on certain lines. So if they didn't spend this money, they'd be charged a substantial monthly minimum anyway. However, they were making no outbound calls on those lines. So we discovered that by rerouting all outbound calls going to New York State, they'd be charged less per minute, and they'd also recover the money they were wasting. So complete win-win. So the charge was in the bill, but the bill wasn't very clear as to what the charge was for and what to do about it. Neither the bill nor the vendor told the client they should reroute calls to make the best of the situation. And by having an inventory, we were able to identify all the charges, and our process mandated figuring out what each charge was for. So we looked into it and we were able to figure out what the charge was for and identify how to make sure the money was spent on something that added value. And we worked with the client to make sure it was implemented and it worked. So that saved them a bunch of money every month. Item number 6 was we discovered large numbers of unused phone lines at their office. The bill clearly didn't identify what lines were being used and were not being used, and the vendor was happy to charge for the unused lines that wasted the client's money. So with an inventory that incorporated the vendor's usage data, we identified all the phone lines they had, and we checked the utilization of each line and whether the line worked as part of doing the inventory. We could then easily see in the inventory which lines appeared to not be used, and we let the client know this. We then disconnected all the lines for the client after they approved our finding. So, and just one thing to note as well, often a lot of people, they'll have alarm lines or elevator lines or other lines which look like they're not used, but they actually are being used. But usually they'll have a lot of other lines which really aren't being used. So you really need to talk internally to find out what the business need is for every single line and verify what's still being used and what will be used for the foreseeable future. The last savings, this is number 7, was that they had not noticed a large discount on one bill for making outbound calls. So the bill was not clear what this discount was for. It also made the discount appear small when it was in fact substantial. So we discovered during the inventory that the discount existed. We then figured out what it was for, and we discovered that the discount was for making outbound calls, and that essentially they had free long distance calling baked into their deal for these outbound lines. However, it wasn't obvious by looking at the bill how big it was, and it was also buried in the bill on an obscure page. Neither the vendor or the bill told the client clearly that they weren't taking advantage of this situation. So if they rerouted more outbound calls down the line, they could see a substantial reduction in their long distance bill. In fact, this one change generated thousands of dollars a month in savings. So we suggested the change to their routing, and we monitored the situation, and we were able to capture the savings for them. And it turns out that they did in fact save thousands of dollars a month just by making this one change. Really, really added up. And so that was another great win. So that's how we did it. So we went beyond what was obvious in the bills to find additional savings. And with a process to create visibility and manage individual costs on a granular basis, we're able to find nearly 50% savings in their already low telecom spend. And the CFO and the IT department were quite pleased, as they now had a lot of extra money every month to spend on other things. And they only spent a few hours meeting with us and asking their techs to reroute some of the calls. So please share this with anyone you think this would help. You can also check out the book and the website in the channel description. And if you'd like to see similar results and you're spending a lot of money on telecom or other vendor services and would like to spend less, you can reach out to us or myself on email or LinkedIn, the Berlin Pacific website, and under Berlin Pacific on LinkedIn. And also you can check out the book, Principles of Telecom Expense Management. It goes into very extensive detail as to what all the different steps are and how this is done. And not really any secrets in there. So anyone who does have the time to do this and wants to do it themselves, they can just buy that book and follow those steps, and it's pretty straightforward. All right, well, hope this was helpful and educational, and thank you, and look forward to hearing from you guys. Bye-bye. Oh, please put something in the comments as well if this relates to anything you've seen, and I'd love to hear your stories about how you save money with your vendors.